One candle holds all the information that you need to generate your buy or sell signal. I'm not talking about this candle. I'm talking about these candles on the chart. Now, my promise to you is that by the end of this video, you will know how to generate your own signals using only one candle. My name is Joseph with 5 years experience trading, 2 of which I have been profitable, and I have helped over 50 plus nurses become profitable traders. And in this video, this is exactly what we are going to cover. Number 1 is what a candlestick is. Number 2 is why it's so easy to misread candles. Then number 3, we will look at the correct way to analyze candles. And then lastly, we will look at generating your own signals. And at this point, if you have a pen and a book, then take some notes. Let's get into it. Number 1, what is a candlestick? Now, a candlestick is not this, but let's imagine this is what we are looking at the screen. This is a representation of price and time. So if it's a 5-minute period, then the price fluctuations will be shown in this one candle. So basically, a candlestick just shows you price and time so that you can know whether to buy or sell. Now, it's more than just a pretty box that shows you price and time. Now, here's the structure of a candle. We have a high and a low. We have an open and a close. And this is how it looks like. The high will always remain the high because it's the highest point price has reached. And the low, same thing, will always remain in the low, whether the candle is bullish or bearish, because it's the lowest point price has reached. Now, the open and the close is important because it shows you who is in control of the market. So if you can understand these 4 concepts, high, low, open, and close, then you are set for life. Why is it so hard to misread candles? And this is through my own experience. Now, it's called beginner's ignorance. When I started out, all I wanted to know was, tell me when to get in, tell me when to get out. Don't burden me with all this information of what candles actually mean. And maybe that is exactly your case. So what happens is that you get a strategy, it starts working, and then at some point you start losing. And since you don't understand the inner workings of the basic fundamentals, you jump to another strategy and another, looking for that perfect strategy. And the last thing is that individual candles, they seem too little and insignificant to really matter. For example, if you look at these 2 candles, a lot of people really don't pay attention to these types of candles because they are small. And put yourself in their shoes. You know, you are small, skinny, short, whatever. If people discriminate you and devalue you because you are not as big as me, how will that make you feel? So even candles, let's assume they have feelings, and each candle matters. All right. So what is the correct way of looking at candles? By the way, if you're a nurse, this is a full course in our community. And I always do classes Monday and Tuesday for beginners. So join us, link in the description. Anyway, number 1 is support and resistance. So we talked about the high and the low, but in reality, the high and the low is just support and resistance. If you think about it, if this is a 4-hour candle, if you go to the 5-minute, the area of resistance and support is usually the high and the low of that candle. So understanding support and resistance is the first step. The second thing is understanding strength and weakness. What does that mean? This is what strength looks like. So if price actually breaks out and closes as a strong breakout candle, either to the upside or to the downside, then that is easy strength. This is what weakness looks like. When price tries to break out, then it's pushed back in. So we tried going up, we were weak, we got pushed down. So obviously, this is a reversal signal. This is a continuation signal. So once you understand strength and weakness, then now you can start playing around with candles. Remember, we have only looked at two candles so far. The one that sets the high and the low, and the one that either breaks out or fails to break out. Now, another thing we have to understand is volume. You don't want to just trade any time of the day. Notice the difference. This box here represents a time when we don't have volume in the market. This, on the other hand, represents volume. Compare and contrast. We have consolidation, small candles. We have big candles that are trending in one direction. This is when you want to come to the market. Now, point here is that you want to understand the basics of the candles themselves and then start building upon those basics until you have your money in your account. All right. The next thing we have to talk about is generating your own signals. So how do you do this? This is the process that we will follow. So let's go into the charts and I will show you. We will follow this process. Step 1 is time. So 9:30 to 11 a.m. New York time. You can come to the market. You can change your time zone here on TradingView. Come to New York so that it's easier for you. Now, the reason we come to the screen at this specific time is because that is when we have the most volume. And you can see all of my trades, I take them in this time. The next thing is what we call support and resistance. So from what we have learned, support and resistance is in each candle. So let's imagine we have a bullish candle like that. And it sets your high and your low. So this is on the 5-minute time frame, by the way. So the candle from 9:30 to 9:35, that sets your opening range. So you have your high, you have your low. Next thing is you identify signals of strength or weakness. For example, if price either breaks to the upside, that is a sign of strength if it closes above. It means that there is a high probability that the next candle will continue in that direction and even the next candle like that. Now, this is a sign of strength. Now, you can also have a sign of strength in the opposite direction, which tells you to exit your trade and even change your entry, take the other direction. And this happens when, say for example, this point, all blue candles are going up. So this is a very good sign. Then at some point, you print a red candle. Now, a red candle in itself is not a signal. It's a sign. It's telling you there's a high probability that this momentum is coming to an end. And so if you had taken this trade and the next candle, by the way, continues to break to the downside, what you do is you exit your position, take another position here to continue riding down. Same thing happens when you are selling. Say for example, this is your support. When price starts going down, you sell at the breakout and it continues going down. That is a good sign. Then at some point, you will get a blue candle. And a blue candle in itself is not a big deal. However, if the next candle is a breakout in the opposite direction, then what you do is you exit your position and then you take the opposite direction to go back to your entry. Now, it's as simple as that, by the way. So what I'm going to do is we are going to look at some of the examples I have lined up for you. So we have this candle at 9:30, which gives us our high and our low. Notice how price just tries to go higher, fails. But then as price is breaking down to the downside, it's breaking below our area of support. That is where you get in and then you target your 1:2. Let's go to another scenario. Same thing here. We have this red candle here, setting the high and the low. The moment this candle breaks out, that's your entry. You are targeting these highs up here. So this red candle here is your area of resistance and support. So what you do is the moment price breaks out, that is your entry. And then your stop loss is below that breakout candle. And then all you do is just wait and see. Now at this point you get stopped out. You can also take another position because notice how price goes down, then gives us these two candles, which are reversal candles. What you do is you get in at that breakout candle because this candle sets the high and the low. And then what do? You ride it up to that high. Same thing here. We have this particular candle, this one, this green one, is our area of resistance and support. The moment this candle breaks out, that is your entry. Stop loss is below breakout candle. You are targeting a 1:2. Same thing here. Now, you do get stopped out sometimes, but point here is that where is your area of resistance? So your first candle is this. So that is your area of resistance. Price breaks out, you get in, get stopped out. You have these two candles that are reversal candles that signal strength to the downside. You also take a position going down, you get stopped out. It's okay. You move on. Same thing here. This is, where is the first candle? This is the first candle. So that is the area of resistance there. When price breaks out, you get in, you target the next area, which is a 1:2 or whatever. Next thing, same thing here. Notice how, where is the first candle? So at 9:30, this is your candle. This red candle is your area of resistance. The moment price breaks above, you get in, you get stopped out. But notice these two red candles, they are our reversal signal because the first red candle gives you your area of support. And then the second one breaks out and closes below it. You get in, stop loss above breakout candle, then you are targeting a 1:2. You move on to the next example, which is this. Notice this is where at 9:30, this is the red candle. Then price breaks out, get in, target a 1:2. Same thing here. We have where is 9:30. This red candle is 9:30. Price breaks out at 9:35. That is your entry. And you get stopped out. But notice how price goes down, then gives you another reversal signal. So these two candles. So I would get in here again, stop loss below breakout candle, and I would be targeting a 1:2, and you can see how it plays out. So basically it's the same thing. We have 9:30 giving you this area of resistance. Then price breaks out, you get in, stop loss below breakout candle. You are targeting a 1:2. Notice that we have generated buy and sell signals using only one candle. Basically, that's how one candle can transform your trading life forever. And so nurses who want to learn more about this strategy and see how I apply it in the market every single day, join our community, link in the description. And if you got value from today's video, subscribe, and I will see you in the next video. Peace out.